This leader is provided to permit the projectionist to complete adjustment of focus and sound level before the film begins.
If you could buy a money tree, would you buy it? There are companies within the stock market that aren't trees that grow dollar bills, but they are businesses that do nothing but earn cash. And you can own them and get some of that cash. Hey, are you okay? Yo, you alright? You will make money. Hey! You good? Listen. While you sleep. I'm a little worried about you right now. I don't know. Hey, this cash is waiting. You will look at all the financials of a company, invest in great companies with loads of cash, feel fully confident as an investor, and make great money in the stock market. As you learn how to find great companies and invest in them, you will earn cash while you sleep. And you will learn this because I'll teach you. Welcome back to the channel that simplifies the stock market. In this video, we're going to be going over cash flow statements. I'm going to show you an example of a company with great cash flow, Apple, and then I'm going to show you another company with not so great cash flow. And then to end it off, I'm going to show you one of the companies in my portfolio that of course has great cash flow. Now let's quickly get into what the cash flow statement is and how you can use it to your advantage to make money in the stock market. So as for what the cash flow statement is, it's the financial statement that shows you the flow of cold, hard cash within a business. Listen, I do not care how futuristic and revolutionary a company is. I don't care if the company manufactures electric vehicles that can fly, drive, and speak 100 different languages. If the company doesn't start to earn and generate cash, eventually, it will fail. Cash to a company is like blood to our bodies. If you take it out, it won't last too long. So that's the what. And now for the how you can use it to your advantage to make money in the stock market. There are companies within the stock market that will pay you cash while you own them. This cash that they pay you is called a dividend. The dividend is the cash payment that a company gives to you for being part owner. But not all companies pay you dividends because not all companies can. So now I'm about to show you some cash flow statements and show you what to look for if you want to get paid dividends and if you just want to find some solid companies to invest in the stock market. You generally want to see a company with strong, positive operating cash flow. They're spending cash on their investing activities and they're spending cash on their financing activities. So financing cash flow is net negative. So if you see a company in which these things are the opposite, you're playing a dangerous game if you choose to invest. These companies are really risky and choosing to invest in them could increase your chances of losing money in the long run. So when looking at Apple's cash flow statement, I see right off the bat that Apple has the prototypical attractive cash flow statement. You see strong operating cash flow, and this is the cash that Apple generates from its day-to-day operations. And then you see a negative balance for investing cash flow. And when we expand this out, we can see that this is primarily from net PP&E purchase and sale. Now, PP&E is plant, property, and equipment. So this means that Apple spent $8.3 billion, because this is in thousands, on maintaining, upgrading, and purchasing plant, property, and equipment so they can continue to generate cash in the future. And then we see a negative balance of negative $1.4 billion in net business purchase and sale, meaning that Apple spent $1.4 billion in acquiring, purchasing other businesses, again, in order to further their growth in the future. And then when we close this out, and when we look at financial cash flow, we see that they have a negative balance of $86.5 billion. And this is a good sign for me because it tells me that Apple is probably paying dividends out to the shareholders. They're paying off debt and they're purchasing back their outstanding shares on the open market. So we can expand this out in order to check this and see if that's the case. And it is the case. We see that net common stock issuance is negative $71.7 billion, meaning that they purchased $71.7 billion of their own stock in the market. And then we see cash dividends paid of $14 billion, meaning that they paid out dividends to all their shareholders. And that's how you get this figure right here. This 82-cent dividend for each share of Apple that you own. And then to end it off, we see that they have a strong positive free cash flow balance of $71.7 billion in the trailing 12 months. And how you arrive at this free cash flow, you take the operating cash flow and you subtract out the capital expenditures. You can watch my video on free cash flow in order to understand this concept more fully. And that's it for Apple's cash flow statement. It's a strong and attractive looking cash flow statement. People love this company because it sounds sexy and exciting. Drum roll, please. CRISPR Therapeutics. Boy, folks love this. And we won't spend a lot of time on this one. We'll go to Yahoo Finance and do a quick breakdown because, quite honestly, I don't do a deep analysis on every company in the stock market. So first things first, I see that they're losing cash from operations. And after seeing this, I would immediately move on, like no investment, but let's continue. For invested cash flow, the balance is negative, which can be a good sign. When we expand it, we see that it's primarily from them purchasing plant, property, and equipment and purchasing other investments. So I have no problem here. This is actually a good sign. Now, when we get to financing cash flow, we see a large positive balance of $1 billion in the trailing 12 months. And this puts me on alert because there are only two ways that this company would have such a large balance here, and neither are necessarily good for me. One, they're either selling off pieces of the company for cash, or two, taking on a lot of debt. So when we expand it, we see that it's one, selling off pieces of the company for cash. You see $982 million from issuing common stock and $33.8 million from proceeds from stock options. So yeah, neither one of these are attractive to me as a potential investor. And then, of course, we're going to have a negative balance for free cash flow because the company has negative operating cash flow and still has to spend cash on capital expenditures, plant, property, and equipment. So no dividend. Watch this. So CRISPR definitely wouldn't get my cash investment today. But the beautiful thing is, if you disagree, then, you can do what you want with your money. And you could be right and I could be wrong. And you can make a lot of money. Now, let me end off by showing you a company that I would invest in. And I actually have because it's in my portfolio. The company is OneMain Holdings, ticker symbol OMF. Now, this is a financial services company and is one of the companies in my portfolio that pays me cash while I sleep. So again, we'll do a quick analysis of their cash flow statement via Yahoo Finance. So the first thing we see is that they have strong positive operating cash flow, and this is good. This is good. We see that they are investing in themselves for future growth, indicated by the negative $751 million cash balance for investing cash flow. And when we expand this out, we see that a large chunk of this $751 million is the cash that they've lent out, amounting to $748 million. That's why you see a negative balance for proceeds from loans. And again, this is a financial services company, so they loaned out this $748 million with the intention of being paid back plus interest. And then we see a negative balance for financing cash flow. And when we expand this out, we see that this is largely due to them paying out $806 million in dividends last year and purchasing back shares. Now we see that net issuance payments of debt is positive $487 million. But again, this is a financial services company. So they would likely borrow this cash at a lower interest rate and then turn around and lend it back out at a higher interest rate. And let me show you their dividend payment. Now, here's a dividend, though I'm not sure if it'll actually be this high in the future. And then we see free cash flow is positive $2.2 billion, the same as the operating cash flow because the company has no capital expenditures listed. And I checked the balance sheet to make sure that this wasn't a mistake. And nope, they didn't have any PP&E. So no mistake. And great free cash flow is a good thing. Now peep this. One of the main reasons I chose to invest in OneMain Holdings is this. These are the stock prices of each of the companies that we looked at. And these are the total number of shares outstanding in each company, or the total number of pieces that each company has been chopped up into. And when you multiply the price by the total number of shares in each company, you get each company's market capitalization, or the market cap. Now, this market cap shows you the value of the entire company according to the stock market. So if you wanted to buy each of these companies outright, these are the dollar amounts for how much you'll have to pay, plus a premium. And these are the free cash flows of each of the companies pulled from their respective cash flow statements. Now, when you divide the market cap by the free cash flow, you get what's called the price to free cash flow. And now I can look at each of these as a gauge and say, hey, if I chose to buy this company today, how quickly would it make my investment back for me? So now I can look at each of these figures in terms of years. And that's the name of the game with investing. In terms of math, all you need is addition, subtraction, division, and multiplication. Once you start with the cosine, sine, tangent to the second power of, loop around the world, come back with the standard deviation and the covariance, you're doing too much. Cut it out. And that's all for the cash flow statement. Hello? Oh, you're back now. You're funny. I've been hungover and having a headache this whole video. And you ain't even know it. Till now.